Good morning, treasurers. This is your host Parthesh Shah, co-founder of Fintech, and you are listening to Night Snippets. In the international market, US Senate is getting ready to approve a larger COVID-19 relief package. With stimulus optimism, US 10-year closed at 1.12 percentage points and 30-year closed at 1.87 percentage points on Tuesday. German 10-year is also trading 3-week high at minus 0.48 percentage points. Since the Georgia win on 5th of January 2021, US bonds have traded in 105 to 115 range, and we at Night Research kept the medium-term yields at 125, after which the next stop is at 150. In the crude oil market, for the week ending January 29th, API, which is American Petroleum Institute, reported a draw in crude oil inventories of 4.2 million barrels versus analyst estimation of an inventory build of 500,000 barrels. Mind you, that this is the second big inventory draw in consecutive months, or rather weeks, beating the analyst estimations. Crude is now trading at $57.40 per barrel. Market seems to be range bound, with crude's short-term range at $55 to $58 per barrel. In the currency market, dollar index or DXY is at 91.02. If DXY succeeds to hold 91 level for 2 days, we are now anticipating dollar to touch 91.91 in a week. DXY's today's range seems to be 90.78 to 91.35. USD CNY or Chinese yuan is at 646. USD INR with a low of 72.92 closed at 72.96 and traded within 13 paisa range. USD INR is expected to trade between 72.80 and 73.10 band today. In the domestic market, as you know by now, government will borrow additional rupees 80,000 crore in FY 2021. FY 2022, we are looking at 12 lakh crore borrowing program. We are also looking at a fiscal deficit for FY 2021 at 9.5%. For next year, which is FY 22, fiscal deficit is pegged at 6.8%. And then the consolidation in fiscal deficit over a period of next 5 years, with the terminal year FY 26 with fiscal deficit of 4%. This is huge bond supply, and limited appetite for bonds at current levels creates the demand-supply mismatch. 515 GS 2025 closed at 566 versus 557 the previous day. 577 GS 2030 closed at 615 versus 609 the previous day. Let's do the 2nd Feb 2021, yesterday's SDL auction analysis. The bloodbath continued for SDLs as well. 6-year Rajasthan at 645, 10-year Rajasthan and Goa at 685, UP, Punjab, Manipur at 688, Jammu Kashmir at 699, Andhra Pradesh 11-year at 690. We at Night Research have been vocal and had given you the possibility of SDL yields at 675, 680 levels after the budget, and it has materialized in a day itself. Many of our clients had participated in SDL auctions yesterday as usual and are happy to offload in secondary. Yesterday's SDL auctions were largely under-participated and hence very high cutoffs, resulting in high yields. In short, in Indian fixed income space, we remain largely bearish for FY 2022 and anticipate 640-650 range for FY 2022. In near term, we are hopeful that RBI will hold the fort at 625, which is a great psychological support. Few of our clients are taking RBI MPC trade in a day or two before the RBI MPC policy meetings and the comments on 5th of February. 515 GS 2025 also looks attractive at 566. Cheers to all those treasurers who had listened to us and reduced their portfolio risk. We are now designing strategies for redeploying funds into the market to cover the lost interest income. But with this single small trade, they were able to make 1.5 to 2% of their reduced risk in a matter of 15 days. We remain hopeful on the upcoming RBI MPC policy and expect rates, or rather yields, to cool off by 5 to 7 basis points, only to rise again in the future. That's it for today. You were listening to Night Snippets with Parthesh Shah, co-founder of Fintech. See you tomorrow with the new episode of Night Snippets.